Welcome back to the Permissionless podcast brought to you by the team at Guardian. And today, as always, we are going deep with DeFi teams who are building really something exciting on the edge and stretching the boundaries of what's possible in DeFi, in Web3, and dealing every day with the problems that are holding DeFi back. And of course, we're living up to that promise today and then some with really a wonderful conversation with Madi from DeFiTuna. And today, DeFiTuna has a leveraged concentrated liquidity farming product on Solana that, as you'll see, really gives users the introspectability and the manageability of concentrated liquidity positions, along with, of course, leverage to increase the amount that they're able to farm in a way that really not many protocols have been able to grasp and solve on the UX side. And as you'll discover, we're discussing some alpha, some new releases by the team at DeFiTuna that is quite exciting, to say the least. So we'll get into what exactly that is in the discussion that follows. But of course, before we can dive into that, my name is Owen, and over 3.5 years ago, I founded Guardian based on the premise that DeFi would house trillions of dollars of assets, and we would need an extraordinary increase in the level of security that we could provide to be able to ship confidently in that environment. And today, I'm happy to say that we have achieved the level of security necessary at Guardian. We use not one, but two dedicated auditing teams led by a world-renowned lead researcher and accompanied by a full-time fuzzing engineer to fuzz the scope entirely. And with all of these things wrapped in our complete methodology, we are able to put up our own funds as a bounty on the scope in order to prove our confidence in the contracts and the effectiveness of our model. And so really today, it's just a matter of time for DeFi to catch up. And now, of course, without further ado, let us get into this conversation with Madi from DeFiTuna. Well, I mean, first of all, dude, thank you so much for taking the time to join us today. And I mean, before we even get into everything you guys are building today, I think I'd love to start and just hear a little bit about, like, how did you find your way into this space, building with DeFi and into the Solana ecosystem?
Yeah, first of all, thank you for having me. Always a pleasure. I was personally a full-time trader since 2017 on BitMEX, using a lot of leverage, Bitfinex, all the good stuff. 2018 and 19 died a lot with the volume. Yeah, I was going through a lot of layer ones. Back in the day, Ethereum just looked to have no future. My brother owns a software company. He's been a programmer for 30 years plus and never able to convert him to crypto until I found the Solana white paper. I sent it to him. He read it and yeah, he just said this makes perfect sense. We started building together.
Is your brother your co-founder?
He's our partial CTO. You know, we try to divide things because family is family at the end of the day. It's difficult to build a business together. So
Sure, yeah, that's really cool though.
Well, yeah, I'll say first of all, yeah, that's gonna be an interesting dynamic to be building alongside your brother. I mean, definitely pros and probably some cons as well. But what was it about the Solana white paper that made him say, like, this just makes sense, if you know?
From what I remember, it's to do with the scalability and like the way radio works as well. Like he's built a lot of tooling for municipalities to do with, you know, how can you tell what time it is, you know, locally. Yeah. Or between radio towers, like how do they know that signal came or the communications, how they work? For him, it just clicked that, you know, it works for blockchain systems, these same key core concepts as it would for our everyday radio towers, you know, and the way they operate and communicate with each other.
That's pretty interesting. And of course, that translates to Solana's like transaction model. So got in, and did he immediately dive into like building Solana contracts? Like, what was the approach there?
Do you know the candy machine that is used by Metaplex on the Solana space?
I don't actually.
So anytime anyone mints an NFT, most likely they're interacting with the Metaplex's stack. And we were the first ones to launch this back in the day in 2021, I believe, when NFTs just became a thing, you know, like within 48 hours. Some of the core engineers backed by Tori Anatoly, pushed the NFT standard, and we built a candy machine. It's a way to mint a collection. It really back then it really didn't exist. You needed to do it either manually or write your own script, and we made sort of like a standardized model. And then we sort of paved into the game studio realm. We built a game out of the NFT collection. Unfortunately, we only raised exactly how much we needed. So, when the bear market hit, we ran dry on funding and had to move on.
What kind of games were you guys building with the game studio? Like, what was the vision there?
The vision was to integrate the NFT system into the game. Actually, funnily enough, Danny, my brother, did end up making an SDK for Solana phone that, Unreal Engine 5. Cool. So, like, you can actually connect the blueprints. Have you ever interacted with Unreal Engine?
I haven't used it, no.
Familiar, but no.
Yeah, there's just like anyone can. It's kind of like a plug and play design. Like you have these things called blueprints, and they you can program interactions. And one of the things that he did is like he programmed it so you can actually communicate with blockchain within the game. He was the first one to do it. Ended up receiving a large offer from Star Atlas. You know Star Atlas, the game?
Yeah, I've heard of that.
So now he's one of the directors there, and actually giving like partial CTO services to DeFiTuna. But that's just kind of like a large time skip. There a lot of happened in between.
I see. So, okay, so then, I mean, how do we ultimately connect we're working on game design. You guys have done a lot of work in the NFT space. He's built an SDK for Unreal Engine to actually like interface with blockchain. What is it that ultimately got you guys to this space of concentrated liquidity and lending?
Yeah, sure. I've been always a full-time trader, and when DeFi came around, we also launched NFT collection, but also we did like an airdrop for the coins, and we spoke with Radium back in the day, and Radium, what they launched was a constant product formula AMM, which basically spreads the liquidity to infinity. So impermanent loss all over the place. And they had like this whole thing around like heavy incentives because it really didn't make sense to provide liquidity. And there's just fascination around how cool this is. You no longer had to go to a centralized exchange. You could just launch it. Yeah, it was not perfect, far from perfect. It was horrific at times, but it was magical internet money and it was great. And just watching how it morphed to concentrated liquidity market maker, and then innovation died down there. And from our perspective, we always thought, wow, like this is such a big problem. And like we kept an eye on it. And, 1 year, 2 years, almost 3 years down the line, no change. And we said, well, let's get our hands dirty. We can definitely revolutionize this space.
Yeah. And I mean, so I guess digging into that, like what is the core problem that you guys are really addressing with DeFiTuna? Is it basically just leverage on LPs? Obviously, impermanent loss is still a thing, but are you guys trying to address it in some way? What's the core issue?
I'm really glad you asked. Actually, Owen, have you actually provided liquidity anywhere in the space on a CLMM model?
Yeah.
Wonderful. Well, so I think you would agree with me then that, open up a position anywhere, you provide liquidity, you go to sleep. How do you set stops? That's just problem number one. And it only starts there. Second problem is like, how profitable are you? Yield does not mean you're profitable. That's the second problem. There's just, napkin math. Do I need to go to another website to calculate my profitability? Number three is if price goes down, you always lose money. This is like the law of gravity. It shouldn't be the case. There should be ways to hedge. So these three core fundamental issues. And there's a fourth one, which I'll get to later on, is something that we're addressing with our stealth product. Actually, we haven't talked about it anywhere. But those core issues is what led us to build DeFiTuna. You go to DeFiTuna, and we'd like to list eventually all of Orca's pairs. And we have a live P&L. At live P&L, that will tell you in dollar value, just as any exchange would, if you're profitable and how much. If you're net negative, how much. We have auto compound, we have limit orders for take profit, stop loss, the whole suit. And, it's practically free. The way we monetize it primarily is leverage, right? We take 5 basis points on leverage taken.
I see. And so we're addressing all of these core problems. I mean, obviously, yeah, I'll definitely agree. There's a UX issue. I mean, there's even just like an introspectability issue to understand like all this stuff, like to calculate your P&L, you have to do some like napkin math. which you guys are, it seems like you're already handling all of that, looking at, okay, what tokens are sitting underlying in the position at this moment compared to what you had when you started, et cetera. And so you mentioned limit orders as well. So I'm not as familiar with Orca, but I could see this. Obviously, you can do this with something like a Uniswap V4, and definitely interested to pick your brain on your thoughts on the V4 model. But how do you guys achieve this technically? Does Orca have hooks? How does that work under the hood?
Yeah, hooks don't exist in the Solana. On Solana, it's just a technical limitation.
Yeah.
By the way, one more thing that like I think is worthy to address. When you set up your position, you have a beautiful calculator that you're met with. In the entire space, all of it, Ethereum, Smitherium, layer 310, there is nothing that is comparable to our calculator that we came up with. And I'm pretty, happy to say that we put in so much effort. It shows you clearly if price goes to, $150 or drops to 130, how much dollar value you'll be profit or loss.
Yeah.
And then we have this thing where you can time in range, which is, also beautiful. Regarding limit orders, so what we have is we have a liquidator bot that constantly monitors the position. And if your price is reached where you want to get stopped out, immediately we close your position through our liquidations engine. It's, a little bit of a hack, if you would like to call that. But our latest product actually solves it on a fundamental level. Version 4, I think, on the Ethereum space is amazing product.
Yeah.
On the Solana space, it's just different architecture. So limit orders is incredibly hard to
Yeah.
achieve. You use all sorts of cranks. But actually, our latest product, we've been working on our own AMM.
Your own AMM. Okay. So
Yeah.
is that going to be concentrated as well?
So we call it Fusion AMM. If you go on X, there's actually no posts, no follows. We actually haven't talked to anyone about Fusion AMM. You might need to cut this out as well. It's pure out for you guys, if possible, because this will only become public knowledge in a month and a half. Even some of our investors don't know about this one. So if possible, if the editor cuts this out a little bit.
That we could also just release it in around that time so it comes out.
Yeah, sure. Fusion AMM, what it is basically our own take on what an AMM would look like. The way right now limit orders work is that if you put on Jupiter, have you ever interacted with Jupiter?
Yeah.
Yeah, you put a limit order, you want to buy Solana while it's dumping, and you set a limit order at $100. And it goes 110, 9, 8, 7, reaches 100, goes lower. Basically, what they do is that money sits somewhere off-chain, probably accesses off-chain order flow, or sometimes even on-chain. But it actually interacts with Orca Radium. It does a swap. It's not a limit order. It doesn't really pay you. You actually pay fee for swapping. And you might get swapped. A large majority of the time, you actually don't get swapped because market moves fast.
Yep.
It's not very reliable. We have built-in limit orders inside of the AMM, which means that just like a regular AMM, there's tons of liquidity, gets swapped, and like if it would reach $100, you have a limit order there. It would never go lower until it fulfills your order. It's a maker order. You get paid for this order.
I see. Yeah, this actually reminds me a lot of something we audited, I think almost like 2.5, 3 years ago at this point. It was called Pool Shark. And it was trying to do, pretty much exactly that. Although I think it sounds like you're trying to achieve it in a little bit of a different way. It was basically a directional AMM. So you would provide, whatever, let's say I want to have, they had cover positions and they had like stop loss positions or yeah. And basically you could, instead of in a normal liquidity position where the price goes up, you're buying the token that is depreciating value. It would allow you to do the other thing. The flip side, you would buy the token as it goes up and it wouldn't trade back the other way. So it was only a single direction in the AMM, and that way you could also do things like stop losses. You could do limit orders, and it wouldn't trade back once the liquidity went the other way. But yeah, so I'm interested to hear like what is the mechanism by way you guys are achieving this? Is it directional liquidity? What's the underlying technique?
The limit orders is it's a single directional liquidity, but the AMM itself is both ways. So like if you're providing liquidity, you go both ways. If you put a limit order, that's a strict one-way limit order. It can
Mhm.
be bid or ask, but again, it pays the user. So like and it's reliable. It will never execute when current price is lower or higher than the bid or ask. So it's a combination. That's why we call it Fusion AMM.
I see. So you have liquidity that's just sitting on the curve, that's actual AMM, and then you have like this kind of liquidity that's sitting on top of it that is only a single direction.
That's right.
Yeah, I see. And if you know like technically how is that like orchestrated together? Like how is this directional liquidity also included in swaps? I'm trying to think how
So
to
it's very, very, very complex for various different reasons.
yeah.
I guess if you really wanted the nuances around this, you'd need to speak with our smart contract engineer. And to be frank, like he said it many times over, like there's probably on your hands you can count the amount of engineers that could put together such an AMM on Solana.
Yeah.
We're very bullish on the fact that like we're sort of on the forefront of releasing it. If you're gonna be in New York, more than happy to show you in person. Gonna be live on DevNet. We don't want to release it on mainnet because the IDL gets leaked, and we don't want that yet.
Yeah,
If that
absolutely. No, I'm interested to see how it was achieved. I remember in the past the system that we were looking at used like a Dutch auction to basically have arbitrageurs come in and make the swaps for you along the way. But yeah, so interested to see.
no, no, all fully on chain, no arbitrage going on whatsoever. The smart contract level.
Yeah, so I'm interested to see how it works. But yeah, so that sounds really cool. And are you guys thinking of also adding leverage on top of this?
Yeah. So the way our leverage works is it interacts with the lending pool, and like it's through PDAs. It creates so we don't have any access to the positions that people open. You like your pool on Orca, you think it's profitable, but you want to leverage up for whatever reason. Either you want to enter a short or amplify your current position. You can
Mhm.
do that. The entire position belongs to you. You're the only one who has access to it. And when all is said and done, then you get to keep your profits and the lending gets paid back. And the way we view it is DeFiTuna will not have any prejudice towards like any MM. Orca obviously is integrated. Radium is going to be integrated. Meteor will add as well in the future. But
Mhm.
DeFiTuna also has its own AMM, Fusion AMM. We have always been thinking about the liquidity provider first,
Mhm.
and there are a couple of things that go for in our favor. One thing is there's 10% more profitability on our AMM versus the other ones. So we've had so many instances where certain seasons people just not provide liquidity because they're like, I'm making 3%. Is it worth the grind? 13% now.
Yeah,
You know,
there you go.
amplified with leverage, that can like three times, 30 something percent. That's a big deal. Very big deal.
Yeah, and
Yeah.
also with leverage, you're getting, I mean, there's some strategies that you can add on top of that that give you, I think what you guys call like pseudo delta neutrality. And I think that's facilitated through the coins that you borrow to provide liquidity. But I'm interested to hear more. Like what is your guys' approach to almost delta neutral?
So what we have is crab strategy. We call it pseudo delta neutrality because it really is pseudo delta neutrality. Once you open a position, your break even at current price. The further it goes away from your current price and more towards the edge of the range, the more at a loss you are.
Hmm.
Um, but the longer you spend within the range, the more you make money. And if you spend 3-4 days within the range, you close it at where you opened the position initially. You're going to be in profit through the roof, depending on like how much on-chain activity there was, right?
Yeah.
The best take I've seen towards neutrality, that is as pure of neutrality as it comes, was when people used DeFiTuna in combination with deribit options. So options, you can hedge volatility, or you can long volatility. And if
Yeah.
you long volatility and hedge volatility on DeFiTuna with pseudo delta neutrality, you probably have as close to delta neutrality as it comes. I hope that makes sense.
Yeah, really just a matter of if the curves for the option pricing sort of line up with the curve of the losses of the LP.
Yeah, that's pretty much bang on. And if you have time and go to DeFiTuna, play around with well, our borrow assets. Like you can borrow one asset, and then you see how the calculator shows you profitability.
Yeah.
If the token goes down or goes up, play around with it, and then pseudo delta neutrality and pseudo delta neutrality. You really get to see and visualize picture on the calculator exactly how the curve looks like. Very
Okay.
nice interface. Yeah.
Okay, cool. So you can literally see the price curve and see like, at this price I'm at this percentage P&L.
Oh yeah, yeah, yeah. The whole suit, very, very nice,
Yeah, that's
nicely
really cool.
projected.
That is really cool. And then, I mean, if you wanted to try and find some financial instrument that gives you the exact flip side of that, then you would be delta neutral. But yeah,
That's
very
right.
cool. And so you mentioned the deribit options strategy. What other kind of strategies do you guys see people using on DeFi Tuna?
The most popular one would probably be, there were some exciting launches, like Pengu was one of them. There are a
Okay.
few more, and sometimes we list them if they're credible. Anything leveraged is always scary. And if you farm liquidity with leverage on any of those ones because of the on-chain activity and sometimes because of the fee rate, it's just a money printer. So like just go long, or even if you get the direction kind of wrong, the fees on-chain are just kind of insane. You don't need to be a genius. And then on the Solana pair, I mean, sideways markets, people just have like a semi-long position, and they don't need to be a genius also to get that right there.
Yeah.
The best one for the last 2 months was probably Fartcoin against the Solana.
Nice.
Yeah, volumes are insane because a lot of AMMs route swaps through the Solana to Fartcoin, and it's very correlated, so you really don't need to bother about like being out of range. Also, if you're out of range, like okay, you're in Solana or in Fartcoin, that's like pretty much appreciating. It was free money, literally, for anyone who grabbed the leverage.
Hmm.
Yeah, speaking of these newer Solana coins like Pengu or even Farcoin, you've been building on this chain for a while. How have you seen the evolution of like what's getting built on Solana, and maybe even more importantly, like what users of the chain are interested in?
Oof. It used to be the case where there are like crazy pre-sale, not pre-sales, but like people would just raise tons of money and then you'd see the product maybe gain any adoption. These days, you need to have a working product, revenue through the roof, a proven track record in order to raise anything. So like in terms of like builders, like it's mega competitive. I've never seen such high competition out there for anyone building on Solana. What's interesting out there right now, I mean, it's very hard to say. It looks like everyone's onto the launchpad craze, right? We used to struggle with like a one popular, launch of a token, the whole network would almost shut down. And nowadays we're just seeing left and right in the billions launches. Obviously, Melania and Trump really did almost clog the whole network down, very stressful. But that's like as big as it gets. I mean, and Solana's done really well. Anything that's currently interesting right now that I see, I mean, it's hard to tell. Most of it is primitives. Going back to there's one that's like for verifying transactions and getting them. It's what is it called? Oof, it's by a person who was working in MarginFi. What are they called? Paladin. Paladin is a really exciting one. So, when the whole congestion happened with Melania, I was sitting down. I mean, Jupiter was not working. People
Yeah.
were liquidating left and right on Drift. But my brother, where he works in Star Atlas, he said, "Hey, have you tried Paladin? Because like Star Atlas's transactions were going perfectly fine through
Mhm.
their service." So we looked into that. That was like pretty interesting tech. Yeah. Anything that solves the issue of passing transactions, I think is like
Yeah.
gold mine.
Yeah, and I mean, obviously there's a lot of problems even yet to be solved in the Solana ecosystem. What kind of problems do you see that are maybe like even low-hanging fruit in the Solana ecosystem still?
Used to be low hanging fruit AMMs. Nowadays, a lot of people are don't not showing their source code
Yeah.
and building in stealth. So I believe next year it's going to be like one of the most competitive markets, but also one of the most profitable markets.
Hmm.
For sure, especially as we onboard institutions. I can definitely see institutional money flowing in and buying out AMMs that can definitely take place very easily. Um, what else? Anything to do with transactions, and that's like always going to be the gold mine.
Yep,
Any other primitives? I don't know. I think I'm bullish on those two. I think that's the bread and butter.
absolutely. And I was also interested, when you use DeFiTuna, how do you use it? What do you use it for?
Hedging. Liquidity providers for a very long time. If there's a depreciating asset and you still want to farm it because there's a lot of fees, but it's
Mhm.
falling, right? Like how do you hedge
Yeah,
correctly? Hedge, I think, primarily hedging. Also lending. We have by far the best rates for Solana.
yeah.
Nobody comes close. Lock Solana with us for the last 30 days. It was like averaged 13.5% APY.
Wow, nice.
Stables as well, we do well. We average 6.5% on USDC.
Yeah.
Other months we average much higher.
Yeah, and in terms of okay, so we've got the Fusion AMM coming, and that's going to kind of plug into the modular like LPs that you're able to accept as collateral and borrow against. What's the long-term vision? Like, what are you guys looking to ultimately capture once we've got everything
Yeah.
built out? What's like the ultimate goal?
Build by far the best place for liquidity provider to just sit and provide his liquidity.
Yeah,
Just everything across the board from great risk mitigation tools all the way to the best AMM model to also potentially lenders who lend their funds for leverage.
I see. And are you guys, because there's definitely two ways that you could approach this. I think a lot of Uniswap v3 providers are more sophisticated. And of course, now you have institutions coming in. And I mean, some could even say that Uniswap v4 is very much like an institutional product to be able to give like that customizability and, be able to add on stuff like a KYC and whatever. But there's also the retail side of providing liquidity. And I think you could very much attack either one of them and be very effective at, meeting the demands and needs of each one of these like ideal customer profiles. What is it for you guys? Are you guys trying to go more after retail and just make it super user friendly, or maybe you're going upstream to the more sophisticated market makers?
Currently, we've pretty much the way we see it is, lending is going to be the place for a very simple user who just knows, hey, 8% USDC yield or 14% Solana yield some months, 20%. That's great. It beats the
Yeah.
market. I think that liquidity provision is like high tier, sophisticated user. We've done a good job at targeting both, but with Fusion AMM, it's gonna grab again both. Limit orders is for everyone. A new meme coin comes out. How do you set a sell on a current AMM? Sure, you
Yeah.
can give the flow to an off-chain liquidator like Jupiter, but what if it doesn't hit? And so on an AMM level, it will amplify hopefully both sophisticated and simple users. But I have a question for you. I mean, how do you make that distinction? So like when you ask that, what's the distinction between somebody who's targeting the institutionals versus someone who's targeting simpler audience on an AMM level? How do you see it?
I think the biggest difference is going to be at your go-to-market level. I mean, there's a very distinct way in which you're going to market to everyday DeFi users. And I think even just being in the Solana ecosystem, maybe it's just my perception, but sort of it gives you kind of a head start in just like these normal DeFi users. I think, I mean, at least it's my perception that there's more like institutional interest in like EVM and Ethereum. But I mean, it's a completely different process to go and court like institutions. Like, what if you want to bring like a BlackRock fund and have them start like market making on like a Uniswap V4 pool or something like this? I think that's the biggest distinction is building backwards from there, and how do you onboard the market makers from that side? Yeah, that's the difference in my mind. And then obviously the product will meet their certain needs, and of course, I don't know exactly what an institutional market maker is looking for in terms of, how they want to manage it. But I mean, obviously there's going to be different needs at every level of the like capital deployment stack.
I see. Yeah, so then I would say then that probably are the AMM that we're launching is probably institutions first, but obviously very, very useful for users on every level. And, we sort of started like doing that, trying to attract people who are sophisticated on institutional
Yeah.
level. I think that that's sort of the only way of launching an AMM. If that makes sense.
Yeah, and I think the institutional versus like more so everyday user, I mean, obviously it's still going to be a sophisticated user if they're using like a concentrated liquidity platform, is like the customizability. Like, I think that was very much with the Uniswap V4. You're seeing more customizability. This way institutions they can spin up their pools that have like a KYC or they have like a whatever they need to bolt on. But it is definitely much more of like a customized solution once you go up market like that. And you have like much more capital to deploy, but if you need to deploy it in this way, etc. Yeah, so that definitely makes sense.
Yeah, I think for us also, maybe you'd understand our journey a little bit better. It was primarily with self-financed the whole product by myself, and we did have help of Sol Big Brain. He's the founder of Big Brain Holdings. You might have heard of him, but we weren't financed through our teeth. In fact, we only raised like 300K pre-seed. And when we worked for a year and I pressed the green, beautiful launch button,
Yeah,
we only had 1 month runway. We really didn't know what to expect. 2 weeks in, we become profitable. What are we, 5 months live now? Close to 1 million in revenue. So
nice.
we just are so taken back by the amount of love that we received from the community and the
Yeah,
liquidity providers, and we're thinking, what is the next level up? Now, what you
yeah.
said about customers to make it customizable is something that we've already kept a close eye on everything we build. And
hmm
from that sense, layer of KYC that shouldn't really be an issue if need be.
Yeah, I mean, at the end of the day, there are like teams that are working on like specifically being able to like add on KYC to things like predicate. Actually, I had a great conversation with them and what they're building. They're working with a lot of teams trying to bridge the gap between that like traditional world and the on-chain world. But yeah, so I mean, with that in mind, like you guys were able to get profitable. I think do you attribute a lot of that to like the ecosystem that you're in, the product that you built? Like, what do you think was the underlying like success point there?
Well, that was really the peak of the market as well. Like a lot of
Yeah.
people are looking into AMMs. A lot of them first time ever got into the AMM business. At the time also people weren't looking so much into centralized exchanges. They're looking more into DeFi. And
Yeah.
with all these problems, we managed to get a certain niche audience that were already into the liquidity provision space, and
hmm
they helped us almost like our disciples, onboard
Yeah.
other people, and it steamrolled for quite a bit. During this dip in the market, obviously we've seen a slowdown, but also on a larger scale, I think that leveraged AMM is like mega complex. It's
Yeah.
not like an everyday user is gonna get that. Even for someone who's nuanced enough, it would take him like quite a while to grasp it. So I think there's a limit, a very strong limit to like how many people you can onboard to leverage the AMM business
Yeah.
or a model. But obviously the revenue is great there as well. So we got lucky. I would say we definitely got lucky.
I mean, it's almost like you get lucky in the sense that you just pick the right thing to build in the right market at the right time, and then you can spin that up into, really it just takes like that little piece, and then if you execute right from there, because obviously if you guys just started shipping all the wrong things, then that's just going to go back down to zero. But I think, with this like Fusion AMM and stuff that you guys are thinking about adding, I mean, you guys are swinging for the fences in terms of like how big you can really push it. I mean, like if you really do bring like a 10% boost in yield, like that's going to be like a no-brainer offer. You guys can get all the liquidity on Solana. But
Yeah, we were just users first, I think. Users first, and like our team of very, very strong builders. The combination of both is very, very powerful. As you said, uh, very right. You chose the right things to build,
Yep.
and that plays to our luck. And the follow through is very, very important. The 10% we think is a no-brainer.
Yep.
Also, like, where else can you get a stop or like risk management tooling on your liquidity provision? Where can you get that limit order in? And the whole suit is hopefully gonna cement us as like, I think also like our current community, they can appreciate us for bringing in like a lot of these things because I think that like other CLMM companies or projects,
Yep.
it plays to their hand that most people don't actually know that they're at a loss, at a
Yep.
net loss providing liquidity. People think yield is money, and yeah, well, if I've generated that yield and price goes back up, then like I'll make all the money back. And there's just this big narrative around it, but at the end of the day, like it's not a very good idea to keep trading if you're at a net loss. Like, what's the difference between you going buying like Bitcoin for very high, selling it for very low, and you going out there farming liquidity on Bitcoin, and okay, well, at least I made the yield. Yeah, you did, but like you're just as much of a net loss as the other guy. So
Yep.
what's the difference? And we're out here, we are in this AMM business, obviously, especially with the AMM that we're building, but also we're more than happy to show users, hey, you guys are actually at a net loss with us.
Yep.
You might reconsider doing some other things, and we go out there perfectly fine showing it to users and more than willing to lose them, right?
Yeah, I love that candid approach. Like looking at like it is a veritable problem with concentrated liquidity type positions. I mean, well, really with any type of LP and in DeFi that's totally on chain. And I mean, you guys are actually looking at the problem and not just accepting it. I feel like there's, maybe a lot of teams will just kind of say like, oh, it's just like a nature of the product. It's a feature, not a bug. And in some sense, it is a feature, but you can try to hedge it, like you say, or, try to attack it all these different strategies. And then, I mean, I'm interested to see how the AMM that you guys are working on, Fusion AMM, addresses this, technically speaking. But yeah, like being candid about like, hey, this is a problem that kind of makes providing liquidity on chain like not a good experience and not actually like a good opportunity, and able to actually, once you accept that fact, then you can work to address it. And that's the big opportunity with on-chain LP, I feel, especially at this time. And I mean,
Yeah.
secondly, this is just something this is a complex thing. Like concentrated liquidity is a headache. I mean, I've personally audited a handful of concentrated liquidity protocols at this point, and the rest of our team has done even more. And we've even done some of these leveraged concentrated liquidity protocols, and these are scary things to develop and put out because I mean, there's all kind of manipulations, especially when you try to borrow against this collateral. It's like, oh, I mean, you can like flash loan and like in one transaction move the price of the underlying LP to this, and that changes the underlying token balances of the LP position, and you can inflate the fees, and you can do all this stuff. And there's just a lot of like scary price manipulation, accounting issues. So, I mean, how has this been? I mean, maybe of course you're not the best person on the team to ask this question, but like how have you guys been developing this? What's the dev experience? What's like the security process for you guys? How's that whole experience been?
So I give you a real life example. When Melania token launched, the whole network was congested. Have
Yeah.
you tried interacting with Solana back in those days? In
No, I
that time?
wasn't trying to use it then.
It's
So
definitely come a long way. It used to be like unusable at points of congestion.
Yeah.
yeah, definitely. But during that time, it really was unusable. I mean, and the thing is that the primary driving factor was that people tried to outbid each other for a transaction going through.
Yeah.
And also, Melania and Trump tweeting about their tokens didn't really help. So it really stood still. And what happened is Binance was trading Solana USDC pair for at $260, but Orca and Radium went sub 200. Now
Hmm.
we have leverage on top of Orca, and we check for Orca's pool for liquidation events. So we had an interesting situation where we have a lot of leverage positions, impossible to communicate with the chain, and we just depegged and nobody can arbitrage the price back.
Yeah.
So you start thinking about these kind of situations and then very quickly understand, it is a very scary business to get into.
Yeah.
One of the things that we did, for example, is like we used to have this philosophy, or like, okay, we're gonna let anyone be able to initialize liquidation. Like once like all the parameters match, anyone can call a liquidation event and get paid
Mhm.
for it. But then we realized, oh no, we started putting like all these scenarios together and like flash loan attacks. And
Yeah.
flash loan attacks, like they thrive on this. You
Yeah.
take from lending at a certain price, you manipulate in a single or bundled transaction like a flash loan attack, and then you close it out,
Yeah.
and hopefully the liquidation hits at a completely different price and you profited.
Yeah.
But we've put in a lot of thought around risk management. Hyperliquid also like is a really great example of using what they discovered and like try to mimic that on your own platform.
Yep.
We always look at left and right what other people are doing. So like us being the sole liquidators helps. Another thing that really helps is like having open interest that is proportionate to the total TVL within the pool. So
Yep.
we wouldn't allow you to open a position that is $1 million in value on a TVL that is $1 million
Yep.
right? Like, so that's another thing. Like, so all these risk factors, like we really sat down, we put a lot of thought, myself and our core engineer, on the smart contracts. Actually, I was very, very involved on the risk management side. So like I'm very much aware of a lot of these attacks, and we put many
Yep.
different, like a lot of hours on trying to think of and come up with. And obviously, audits helps a lot. But the problem with auditors as well is that such complex piece of work, leverage on a liquidity provision space, that we contacted two, and we even like for them it was quite a task. Like they said, like, hey guys, this is
Yep.
quite a piece of engineering. But thankfully we passed with flying colors, and even then, like that doesn't really tell us much because backend can be exploited. Liquidation event happens on the backend, right? Like
Yeah.
it's not something that is built on the smart contract. And more often than not, like what gets audited is actually the smart contract and not so much your backend server or like what your logic is behind there. So yeah, what can I say? I think your number one priority should be like launching, but also not having an overnight success because you're gonna end up like Lunaterra,
Yeah.
which frankly I think if they had a slower pace success, they would have done fine.
Hmm. Yeah.
And and also you need to be mega motivated to be 24/7 by your desk during the first 3, 4, 5 months,
Yeah.
really taking care of the baby. There's just no way to prevent yourself from all vectors of attack. No audit will do that for you. So that's what I can say. Like invest heavy into audits. Make sure you're not overnight success, and you're
Yeah.
gonna do fine with flying colors. Like should be fine.
Yeah, and I mean that's an interesting point. First of all, I will say I like the fact that you guys are the sole liquidator. I mean, obviously the decentralized maxis will not like that, but from a security risk perspective, that definitely makes things a lot easier, not having to worry about like anybody can liquidate themselves, can they like force themselves into self-liquidation and all this stuff. Try to get some like a flash loan attack, like you said. And then also yeah, I agree. Like a lot of, I think I see this as a trend where more DeFi protocols are moving increasingly off-chain, actually, especially with like the perps order book sort of wave that's happening where it's like an order book that lives off-chain and it settles on-chain. And that's where you can custody your funds, whether it be like a USDC or like a USDE, and then be able to deposit withdraw, but trade on the order book and then just have it settle there. I think a lot of these systems are going to move, they're going to start to move more and more off chain. And I think people are going to realize in the security space that, hey, we need to be auditing actually like the entire off chain system as well. And we started doing that. We started just doing like full infrastructure backend audits. I mean, included because I mean, with a lot of these systems, the more you have off chain, it's like to spot if something's an issue, you kind of need to see the full scope of the surface area. So yeah, I definitely agree with that comment that you made there. Yeah, and I think, man, it is, especially when you're building something novel and on the edge. I mean, the amount of investment that you have to have, like the amount of conviction that you have to have in your product is completely understated. Like you've got to be building for, I mean, I'm sure you guys have been working on this for, I mean, like it can take teams like years to work on
Yeah,
like
yeah.
this. I mean, how long have you guys been working on this tech?
We 1 year in stealth, and to be frank, our most brilliant engineer that's on the smart contract side, which is really the bottleneck.
Hmm.
If so, like he was busy with something else, and for half a year we spent time around circles with some other guys who, if you gave them 3 years, they wouldn't finish it in 3 years.
Yeah.
And that's the scary part, where you don't really know that if you can build it unless you spend that time and like burnt money, and then
Yeah.
you need to look for someone else. I think that's also like a big hurdle. A lot of these things you don't even know if they're possible to be done on chain,
Yeah.
on smart contract level. A year, yeah, but out of that year we probably lost at least 5 months.
Hmm.
Uh, and that's also part of the reason why we were super scared when launching. You're thinking initially, oh, I have this budget. We're gonna launch at this date. We have 4 months to become profitable, and life's like, no, it slaps you in the face. Yeah, you're not gonna build it with this engineers, and
Yeah.
then you're left scraping. Really stressful time. And then like when you have built it, we were really burnt out. But also like we just launched, burnt out, and we had, I mean, there's this one guy, he would pop up in Discord on the weekend every time when everyone's asleep and write, "Hey, I found an exploit, pay me money," or I go on Twitter and we'd start asking, "What is it?" He DDoS us. We had nothing behind Cloudflare, so like our front end would go down, but nothing gets hacked.
Yeah.
Really, so like we'd reboot it, we put it behind Cloudflare, and then he comes back and he finds an API that he can like the it's not sitting. It's like our VPN that was not sitting behind the Cloudflare. He nuked that and
Yeah.
asked for money. Yeah, and it's just around the clock, 24/7. Attacks from all vectors. Network shuts down. Liquidator bot suddenly decides to like not work because you don't have any wrapped soul in the wallet that is responsible
Oh
for
yeah,
liquidity.
of course. Yeah.
And it's like, what the hell? I never accounted for that. Or just so many things. It's hard, really, really hard. But it pays off once you have it going. And I will say that also, like, we're doing everything on chain. We strive to do everything on chain. Yeah, sure, the liquidations engine is not on chain for various different reasons. And some of the infrastructure is not. But the AMM side and settlement and everything, the order flow from zero to hero, everything's done on chain. But still, like, we have servers, right?
Yep.
We have infrastructure. Thankfully, we built everything on bare metal. I was thanks to my brother. He was very keen on the idea. We've been speaking to like other companies who are our competitors, and they pay like their own cloud and
Yeah.
AWS 50K a month. Some wallet providers, they spend 200K a month
Wow.
on infrastructure. We are 3K,
Yeah.
3,500. The difference, and that's because we really, on a fundamental level, we really like to have a scalable solution. Frankly, because we weren't like mega funded to our teeth, which
Yep.
goes back to the fact that it's also a blessing, but also like a curse in disguise. Being funded through your teeth, you might just go with like building everything on an AWS server or cloud service.
Yeah.
And then as you build and expand, there's no going back. You cannot switch back.
Yeah. The tech debt is way too high.
So yeah, those are some of the challenges that we face.
Yeah, I like that. Like having a constraint, and it kind of forces you to think outside of the box and even like innovate in some cases. And I mean, bare metal's that's a great example. I mean, 200K a month is crazy for cloud. Wow, I didn't even think it would be that high, but I mean, yeah, I can imagine for some wallet providers. Yeah, I guess that adds up, especially with the amount that they raise. But yeah, and I think you mentioned like the bottleneck around engineers. Is that still the bottleneck for you guys? Like what is the main thing holding you guys back at this point?
We found a good sized team. I mean, we're eight. Most of them are the engineers, including myself. I'm not an engineer, but like I'm part of the full-time team, founder, janitor. Hiring is so hard. And part of our success is our burn rate is like on staff, like 50K a month.
Yeah.
That's like lean,
Yeah.
actually. Very, very lean.
Yeah, very.
We do a good job at hiring, I think. It's very understated. I think that really the key to being successful is not hiring from the US.
Yeah. Yeah.
I'm sorry to say that. Anyone who touched Drift protocol, APIs, anything, they quote 170K a year.
Yeah.
Whereas in the Russian market or Ukraine, thankfully we speak Russian. We can snatch a talented guy, work with him, and he costs 6K, constitutes for like, okay, 70K yearly, makes a
Yeah.
big difference. Multiply by three. But the bottleneck currently is one full stack developer to join the team.
Mhm.
As a lean team, you're looking for someone who's proactive. You don't need to tell him. He gives you a call, he annoys you. He goes out there looking for answers. And to find such a hire is extremely hard.
Yeah,
And even the
especially
price tag, like we started quoting like really ridiculous salaries, and all we got was even more noise. Yeah, so many North Korean scammers. The amount of North Korean workshops that we've encountered in our job interviews, I would say more than 50.
really.
Yeah, 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 it's a real
Yeah.
thing.
Wow. I think I've had a few run-ins, but I try to avoid them like early on, so I'm not sure. But wow, that's a lot.
Yeah, hiring is, I think, the biggest challenge of any startup in crypto. I would say money is like the least of your worries these days,
Hmm.
provided that you're building anything that is significant.
Hmm.
Hiring is, I've heard so many founders who just fund it through their teeth, don't have talent to build anything. The right talent, the right people
Yeah,
to
it's
build it.
about finding the right people and the folks who are like a fit. And ideally, I mean, really to get folks like bought into the vision of the protocol, I think is just as important as them having like the actual technical abilities to actually like deliver and be productive and build the future of the protocol.
As an early employee, yeah, definitely you want people who are in it not for the salary
Yeah.
or the stock, and you're hoping for that. But then again, that really leaves you to hiring talented people who are just ambitious. Our best hires were just talented, ambitious guys
Yep.
who would be able to be brought up within, like, during the work experience. It's also a risk, but it's been by far our biggest reward.
And what have you guys tried so far to go out there and hire? Like what's your overall strategy there?
For the game studio, it used to be like forums, like Unreal Engine forums, odd places, never really job posts. We had mixed results. So like forums, like we found our best hire ever through a random Unreal Engine forum, a guy who built the first lobby for online gaming on Doom. He built it. He built his own like game engine 2004. Like
Yep.
it's insane stuff. Nowadays we tried a bunch of HR companies. Never go to HR companies, especially if they have offices. If they tell you like we're HR, we're in US and London, just think of all the of all the expenditure you're covering on their behalf. And a very, very popular strategy by HR companies is that like they bring you a guy, they negotiate that they're gonna offer on your behalf. Like so they go to companies, you go to HR, you say we're looking for like a lead dev for 180K. And they find someone for 7K or 10K, and they beef up his pricing, and like
Yeah.
they offer you like the same guy for like 180K because that's
Really.
their incentive. Like that's the game. And we've had zero successful hires. We tried six different HR companies. Some of the biggest ones doesn't work. Have your own HR guy, pay him like even like a random guy, you teach him like 2, 3K a month is better than any HR company out there. That's one of the strategies. Job posts need to be in the right places. So we tried Solana's, job post website. I love Solana, but the amount of scammers that we got through that portal, never again.
Yeah.
Yeah, just maybe manual work is the best. No agency, nothing. Have someone you teach them what you're looking for, how to detect for that, and bring him up internally to look for talent and the right places. There's, I think, no other way to be frank.
Yeah, 100%. And I mean, so these HR companies, I mean, first of all, they don't even know the industry, right? Like they have no idea like what Solana ecosystem looks like. So I mean, yeah, I can definitely see where things go wrong there. I mean, how much do they ultimately charge? You said like they would like beef up his salary, but did they have like any kind of like a one-time fee or something like that?
Yeah. So usually how it works is they charge 10 or 15, sometimes 20% of whatever the person you're employing him gets a yearly basis. So like 10% out of 180K is, 18K.
Yeah,
Multiply by 2 because it's 20%. And then like the thing is, especially for senior staff, it's more to do, okay, like it's less to do with technical skills and more to do with soft skills. So like if you hire them, sure, he works 4 weeks in. There's odd behavior, or maybe he's got bad habits. He disappears. Maybe he's
yeah.
uninterested. You ended up paying that fee, and you carry the burden. What do you do next? We've had a hire where the guy just in the middle of the day goes to the forest, comes back after 5 hours, and you're wondering what the hell did he do? He said like, I needed to get inspiration. Weird cases, and they happen. They really do happen.
Oh my God, dude. And then that's kind of wild. So you still have to pay the fee. It's not like, okay, you only pay if they stay for 3 months or something like this.
No, they usually do like 3 weeks in, you pay
Okay,
50%, and then after that third week, you pay the rest of the 50%.
I see.
But the best model that we found when it comes to hiring is like you give whoever you found, hopefully not through an agency. Even if you found through an agency, you tell them you guys are getting nothing until like he's actually properly situated. And after that, there's also like a buffer and like, but we found no success with HR companies and we used a lot. But what we do with employees is, okay, you're working like a test period. It's fully paid, but like with a discount of 10% because we don't know if you're what we're looking for. And
Yeah,
once we've hired you, like after 3% or 3 weeks of test period, then you have like another 2 weeks. And after that, then you're on your salary, like
yeah,
full-time salary with contract. There's no other way, I think.
yeah. No, I totally agree with that. I think, I mean, of course, our approach has also been, manual, organic. I mean, my approach was even to start teaching a lot of folks in, I mean, we're in the Web3 security niche. So, I mean, a little bit different. I mean, kind of adjacent to what you guys are because you're Solana devs. I mean, I started literally just teaching people, and I mean, it's on my channel, and through there you get like, I mean, first of all, you can help people actually gain the skills because there's just simply not a lot of people with those skills, and then from there, like now you've got the audience, and now you can build from there and say like, hey, do you want to work with us? And from, I mean, that has been really helpful for us to get to almost 20 people at this point, with I think most of them, I mean the vast majority of them being technical. So, I mean,
Would
that's
you be the CTO of the company?
what's that?
Or what's your position in the company? And you're on the auditing firm.
Yeah, I'm a co-founder. I guess you could say I don't like to, I don't know, CEO, but I don't, we're not that big yet. But
Technical or
yeah, technical. I think, I
just
mean, if you're going to be a founder of a auditing firm, you kind of have to be, in my opinion.
yeah, yeah.
Yeah,
But you'd be surprised. Some very tech. I mean, ChatGPT. They have like a non-technical.
yeah,
One of the co-founders. You'd be surprised. But regarding that, I think anyone who's in a successful company with good hires oftentimes has a real teacher on the upper ranks. With us, it's our CTO, Danny.
yeah,
With you, it might be, yourself, Owen. I think that's like the greatest success is to have like a guy who's part of the hiring process, who's
yeah.
at heart a teacher.
100%. Yeah, and I think I mean it goes all the way into the culture of the company and how everybody, the chemistry in the team and everything like that. So yeah, I mean I first of all I totally agree that man, it's just a hard problem in DeFi because I mean there's just not a lot of people with a lot of experience. And yeah, I've heard this as a pain point a number of times. So it's a very interesting problem to try and solve. But yeah, I mean wish you guys the best of luck with filling any positions. I mean, of course, we've got a little bit of a technical audience here as well. So, of course, if anybody's interested in what you guys are building at DeFiTuna and the full stack position, of course, we'll send them. Is there any link for like a job description or something we can send them to? We could post.
Yeah, if they reach out to you and you just send it to us, more than happy to review. We're
Yep.
looking for one full stack developer, sort of senior level. He'll be in the comms and very much on-hand building
Yep.
between our senior smart contract and the rest of the team. Or, just a very strong backend is also fine,
Yeah,
programmer.
absolutely. Okay, and I mean, I think we'll be releasing this around the time that you guys are sort of discussing the Fusion AMM. Is there anything else that we should push folks to? I mean, obviously we'll have like the website and the Twitter down below for folks to check out, but anything else we should let them know about?
I think you covered pretty much everything. Not a lot of people interested in the difficulties of building out in the crypto space
Yeah.
companies. It's just a lot of small secrets that, people who just build anything know, or like the headaches. Hiring, my goodness, so hard.
Awesome, dude. Well, I mean, first of all, thank you so much for taking the time and hopping on to discuss everything that you guys are building. Once again, really interested to see how the Fusion AMM comes to being and the technical details of that. But yeah, dude, I think it was an awesome hour.
Yeah,
I really
thanks, buddy.
appreciate your time, guys. Brandon, I have no idea how you found, well, again, Owen, Brandon, thank you very much for the space, and we're always excited to just share. It's a very small space.
Absolutely, man.